The number right here is 11 out of 100. That is your crypto fear and greed index as of today, April 7. This is extreme fear, one of the lowest sustained readings in years. Last week it hit 8, and the week before that it hit 12. We have been in the panic territory for weeks. But open the charts. Bitcoin is still sitting above $68,000. Gold is above $4,600, and oil just surged 4% today. The sentiment and the price action are telling two very different stories. And this is exactly the gap that we need to talk about today. Hello everyone, I'm Kai and welcome back to the Mindful Crypto Life. Today I'm going to be giving you a data-backed and calm look at what's going on in the market this week. No hype, no panic, and just the charts. So let's go through them one by one. Start with Bitcoin. Price right now sits at $68,118. It's actually down 2.23% today. Let's look at the weekly chart. Here you can see the full move. Bitcoin ran all the way to 126,200 at the top. Now we're sitting at just above the MA7 at $67,909. This is your immediate support level. If Bitcoin loses that on the weekly close, the next area of interest is going to be significantly lower. MA14 is at $73,586, while your MA30 is around $88,395. Price is below all three moving averages on the weekly. This is actually a bearish structure and there's no way to dress it up. But here's what makes this week interesting. The fear and greed index has been sitting in between 11 and 13 for weeks. That is near the lowest sustained reading since October 2023. And Bitcoin has not broken down. Price holding while the sentiment is at panic levels is one of the cleanest divergence signals that this market has produced historically. The 24-hour range today has been $68,033 to $70,321. We tested 70,000 and got rejected. That rejection matters, but so does the fact that we held above $68,000 after that. The MA7 at $67,909 is the key level to watch over the weekend. Now let's talk about Ethereum. The current price right now is $2,083. It's down about 3.12% today. The weekly chart tells a painful story. The peak was around $4,800 to $4,900. But now, Ethereum sits at less than half of that. MA7 is $2,040, while your MA14 is $2,270. MA30 is $2,958, all above price. Currently, it's deep in the downtrend on the weekly. Ethereum has underperformed Bitcoin significantly in this cycle. But look more carefully. Price is now testing a horizontal support zone that held back mid-2024. If that level holds on a weekly, then it becomes significant. And if it breaks, well, the picture gets even worse before it could get even better. The fundamental though has not changed at all. Ethereum underpins over $136 million total value locked across DeFi. As we know, Ethereum has real usage and real adoption. It's just that the market is not pricing all of this in right now. The gap between the fundamentals and the price is where long-term positioning has historically happened. And now let's talk about gold. Gold's current price is $4,652. It's actually down slightly today. The weekly chart shows a full run-up to $5,400 and a sharp pullback since. MA7 is around $4,806. The price is currently below it. But here's the detail that most people miss. The funding rate on gold perpetual is actually positive. As you can see here, right now it's at 0.0428%. That means that traders are actually long on gold and are paying funding fee every 8 hours to stay long. This shows that these traders are not panicking at all. They are actually holding conviction positions. Goldman Sachs alone has a year-end target of around $5,400, while JP Morgan is forecasting around $5,000 by end of Q4. Central banks are buying gold at record pace. The pullback from the highs look dramatic on this chart, but in the context of a year where gold nearly ran 65%, this is a consolidation inside a structural bull trend. It's very clear that the long-term case for gold has not changed at all. Oil is the standout chart this week. It's up 4.18% today, priced at $113.83. Now have a look at this weekly candle. The range this week alone has been $109.23 to $116.30. The funding rate is negative at minus 0.0228%. That means that there is a heavy short positioning on oil right now, and shorts are paying to stay in. Well, as we know that the driver behind all of this is the Straits of Hormuz. The geopolitical tensions between the US and Iran has pushed oil to levels we've not seen in years. And here's why this is so important for crypto. High oil means high energy prices. High energy prices feeds inflation. Persistent inflation keeps the Fed on hold. And Fed on hold is a headwind for risk assets including Bitcoin and Ethereum. If a diplomatic resolution gets confirmed, then oil drops fast. Goldman Sachs has actually said that WTI, or your crude oil, could fall into the mid-80s scenario. This would actually relieve inflation pressure and change the Fed's calculus. Always remember that this is not just about the oil chart. It's the most important macro chart in the world right now. A quick note, where I trade all of these markets, I trade it all on Phemex. It doesn't matter crypto, on-chain, and TradFi. Right now, there's a campaign running and the link is in the description. Just a quick example, if you're a new user, you sign up, deposit $20 and trade once. You actually could get a $50 voucher. That voucher, you could open a position, a futures position by the way, and you get to keep all the profits. If you want to scale that up, and then you could deposit more to get more deposit bonuses. And for existing users, there is a trading challenge, so if you want to join that, link is in the description below. Now let's go back to the macro picture. There are 3 dates that you should put in your calendar right now. All are confirmed from official sources. First one is this Friday, April 10. We have the CPI data dropping at 8:30 a.m. ET. This is so important as this is going to be the first full reads in inflation since the oil shock hit. And the market is going to be watching that very closely, so you better do as well. A hot print puts pressure on risk assets. A soft print could shift things very fast. The second one is on Monday, April 14. What we have is the PPI data at 8:30 a.m. Eastern Time. This tells us where consumer inflation is heading around next month. The third one is April 28 to 29. There's no rate cut expected, but always remember how hawkish Powell will move the markets very fast. This includes your equities, your bonds, and your crypto. And if you actually want to watch this live alongside with other crypto natives, make sure to go and check out Tom Crown, because he does the best coverage of FOMC in the YouTube space. And these 3 events that I just mentioned will shape the tone of Q2 for everyone. So go and check them out. A quick wrap up on everything that we've spoken about. Fear and Greed Index is at 11, one of the lowest sustained readings in years. Bitcoin is still sitting above $68,000, with support at MA7, which is $67,909. Ethereum is testing a key support zone at $2,083. Gold is consolidating above $4,600, with traders still having their longs in. Oil is at $113.83 and is moving fast. This geopolitical wildcard is the driving factor of all macro right now. The index measures emotions, and the charts measures the price. Right now, those two are not aligned. This misalignment is actually worth paying attention to. We have CPI this Friday, PPI on the Monday after, and FOMC by the end of the month. If you're still in the market, make sure to stay calm and watch the data. As always, if you find this useful, make sure to leave a like and a comment below. And don't forget to subscribe to my channel. Again, I'm Kai from the Mindful Crypto Life, and I'll see you on the next one. Bye-bye!